The Hong Kong Securities and Futures Commission, SFC, has granted approval for the launch of spot Bitcoin and Ethereum exchange-traded funds, ETFs, marking a significant development in the cryptocurrency investment landscape. This move follows similar actions. As in the United States, the Bitcoin ETFs were a huge success, aimed at bringing these products to market. Three major asset managers, namely China AMC, Harvest Global, and Bocera International, have been given the green light to issue these ETFs, reflecting a growing acceptance of cryptocurrencies within regulated financial frameworks. China AMC, in particular, has received regulatory approval for providing virtual asset management services and is actively pursuing the development of spot Bitcoin and Ether ETFs, with OSL Digital Securities as its custodian. Similarly, Harvest Global and Bocera International have also obtained SFC approval for launching Bitcoin and Ether ETFs, signaling a broader trend toward legitimizing cryptocurrency investment vehicles in major financial markets. However, despite these advancements, mainland Chinese investors are unlikely to be able to access the newly launched Hong Kong-listed spot Bitcoin ETFs due to China's strict regulations on cryptocurrency trading. Mainland China's restrictive stance on crypto, which includes bans on trading and mining, limits the accessibility of such investment products to Chinese investors. The approval of these ETFs in Hong Kong underscores the city's aspiration to establish itself as a regulated crypto hub in the Asia-Pacific region, competing with other financial centers like Dubai and Singapore. This regulatory milestone positions Hong Kong as one of the first jurisdictions globally to approve an Ether ETF, although the U.S. Securities and Exchange Commission, SEC, has yet to greenlight a similar product. While some analysts had projected significant demand for these ETFs, particularly from Chinese investors, recent reports suggest that mainland Chinese investors may be barred from investing in them. Despite this setback, the introduction of these ETFs represents a positive step for the cryptocurrency industry overall, offering traditional investors exposure to crypto assets without directly owning them. The Hong Kong ETF market, while smaller in scale compared to the US, is poised to attract significant attention from institutional investors seeking additional trading avenues. However, institutional holdings of Bitcoin ETFs remain relatively modest, indicating that the impact of these ETFs on the broader market may be more nuanced than initially anticipated. In addition to providing new investment opportunities, the introduction of virtual asset spot ETFs in Hong Kong underscores the city's commitment to fostering financial innovation and attracting capital from global investors. By implementing an in-kind subscription mechanism, these ETFs enable investors to purchase shares using Bitcoin or Ether directly, further integrating cryptocurrency markets into traditional investment frameworks. As cryptocurrency markets continue to evolve, regulatory developments like the approval of spot Bitcoin and Ether ETFs in Hong Kong contribute to the mainstream adoption of digital assets, while also addressing investor demand for regulated investment vehicles in this burgeoning asset class. The approval of these ETFs in Hong Kong is part of a broader strategy to establish the region as a global hub for cryptocurrencies. Unlike the stricter crypto regulations on the Chinese mainland, Hong Kong has adopted a more welcoming policy towards crypto companies and services. The new products are intended to provide not only local, but also international investors with additional options for asset allocation. The successful launch and ongoing high inflows into Bitcoin spot ETFs in the USA could indicate that similar products in Hong Kong may also be well received. This would not only promote capital growth in the region, but also strengthen Hong Kong's position as a leading financial center for virtual assets. According to a report by Bloomberg Intelligence, Hong Kong spot ETFs are expected to operate through the in-kind method, which experts believe could make the investment products even more successful and price-driving for the Bitcoin price. In the in-kind method, transactions are settled through the direct exchange of Bitcoin and do not need to be sold, as with the in-cash method, which is used in Bitcoin spot ETFs in the USA, which can incur fees and taxes. Singapore-based crypto analytics firm Matrixport expects Hong Kong Bitcoin ETFs to attract demand of around $25 billion from mainland investors. However, Bloomberg's ETF expert Eric Balchunas predicts a total of only $500 million in the optimistic scenario. Reasons Balchunas cites for this include mainland Chinese not officially being allowed to buy the ETFs, asset managers being smaller compared to BlackRock and others, fees and spreads expected to be significantly higher than in the USA, and the Hong Kong capital market generally not being as large.